On this episode of China Uncensored, Alibaba, I told you so! Hi, welcome to China Uncensored. I'm your host, Chris Chappell. A few months ago, I did an episode on Chinese e-commerce behemoth Alibaba. The company, which is like a megazord of Amazon, eBay, and PayPal, had the biggest ever initial public offering on a US stock market last September, raising $25 billion and making founder Jack Ma briefly the richest man in Asia. At the time, I talked about some of the risks of investing in Alibaba, namely the somewhat shady shell companies known as variable interest entities that Chinese companies use so they can sell their shares on US stock markets. For more on that, go here. But I also talked about the political risks for Alibaba. Like any other major Chinese company, it needs the right political patronage to succeed. And if you get in bed with the wrong people, well, you might not like how you wake up. Just last month, it looked like Alibaba had forgotten to lock its doors. China's State Administration for Industry and Commerce released a white paper that heavily criticized Alibaba for not cracking down on fake products as well as bribery, amongst other issues. Earlier, the SAIC had done a survey that showed almost 60% of the products found on Taobao, Alibaba's consumer-to-consumer e-commerce website, were counterfeit. On the one hand, that's not too surprising. Around 70% of all counterfeit goods in the world are made in China. And yes, that's why that $20 bottle of Agua de Gio you brought in Chinatown smells a little funky. But the white paper was unusually harsh and blunt, calling the counterfeit issue Alibaba's greatest credibility crisis. It also said that the agency had met with Alibaba about the issue back in July, but held off releasing the information to avoid messing up its IPO. This did not look good. But instead of backing down, Alibaba said they were fighting the counterfeiting problem, accused one SAIC official of bias and misconduct in his investigation, and said that they would be filing a formal complaint. What happened next was interesting. The white paper mysteriously disappeared from the SAIC's website, and just 2 days later, it posted an announcement that the head of the SAIC had met with Jack Ma and that the two sides were working together to fight counterfeiting. The announcement also called Alibaba steadfast and resolute and downplayed the previous white paper as just notes from the meeting back in July. Nothing official about that document at all. So, crisis averted, right? Alibaba is no longer in trouble with the Chinese authorities. They fought back and won. Victory lap! Not so fast. The SAIC's white paper was released right when Alibaba reported disappointing third-quarter results from last year. The two issues combined tanked Alibaba's stock prices, which dropped by 14% in 2 days, a loss of more than $30 billion. And the repercussions don't end there. Several law firms in the US are filing class action lawsuits against Alibaba on behalf of investors because the company did not disclose their meeting with the SAIC in July, which happened 2 months before their IPO. That's not a huge deal because law firms apparently do this pretty often. But the US Securities and Exchange Commission is now also asking Alibaba for more information on their dispute with the Chinese regulatory agency. All of this doesn't exactly inspire investor confidence. So what was really going on here? It's likely that this was a warning to Alibaba. When Jack Ma founded the company back in 1999, former Chinese leader Jiang Zemin was in power. And Alibaba does have links to Jiang's faction, which current Chinese leader Xi Jinping is trying to dismantle during his anti-corruption drive. For example, one of the shareholders in Alibaba is private investment firm Boyu Capital, which has Jiang Zemin's grandson, Alvin Jiang, as a founding partner. The full extent of Alibaba's ties to Jiang are unclear, but according to an investigation in the New York Times, in addition to Alvin Jiang, the company does have links to investment groups headed by the relatives of other Chinese leaders, like Winston Wen, son of former Premier Wen Jiabao, He Jinlei, son of former anti-corruption official He Guoqiang, and several others. Then why did the SAIC delete the white paper and back down over their charges against Alibaba? It's possible Jack Ma still had enough political connections to get rid of the issue. Ma has always been publicly uncomfortable with the idea of mixing business and politics, saying that he objects to making political connections with Alibaba and telling his employees to be in love with the government but not marry them. That's easier said than done though, Jack. After all those years that you and the government have been together, you don't want to even make an honest woman out of them. The truth is, no matter how much Jack Ma protests, his company won't make it without political connections. And with Xi Jinping going after companies that are linked to Jiang, Alibaba needs to cut its ties to that faction fast. For U.S. investors, this should be a wake-up call as well. If one white paper can cause this amount of trouble for Alibaba, it's time to think carefully about investing in Chinese companies. No matter how big the Chinese market looks, at the end of the day, it's still controlled by party officials, and they'll do whatever they have to achieve their political ends. Thanks for watching this episode of China Uncensored. What do you think about the Alibaba brouhaha? Leave your comments below, and don't forget to subscribe, like us on Facebook, and follow us on Twitter. See you next time.